If you live in Singapore, you definitely know the name Kimley. I mean, they're one of the biggest traditional coffee shop operators in the country, a real cornerstone of daily life. Today, we're going to break down their performance from this past financial year, and honestly, it's a pretty fascinating story about how a classic F&B player handled a really tough economic environment. All right, let's get into it. So right away, this is how Kimley framed their entire year: balancing headwinds, building resilience. Now, headwinds is just a corporate way of saying challenges, things like rising costs, inflation, and just fierce competition. But what's interesting is their focus wasn't just on surviving the storm. It was about actively building resilience. That tells you their whole strategy was about strengthening the company's foundation for the long run. So that really sets up the big question for us today, doesn't it? When you're up against all these challenges, how did a company that's built on something as simple as a good cup of Kobe and affordable meals actually do? Did they just scrape by, or did they figure out a way to actually thrive? Let's just jump straight to the headline numbers. First thing, let's look at the top line. Kimley brought in $322.1 million in revenue. Now that's up just a little bit, about 0.9% from the year before. And I know 0.9% might not sound like a massive jump, but believe me, in the F&B world where the margins are razor thin and everyone's fighting for customers, any growth at all is a really positive sign. It shows that even with all that pressure, they held their own and even managed to nudge forward. And what about the bottom line, the profit? They clocked in a net profit of $33.3 million. And again, this is a super steady result, up 0.4% from last year. So what this is really telling us is that their growth, even if it was modest, was profitable growth. They weren't just selling more stuff for the sake of it. They were actually managing their costs so that that extra revenue turned into real profit. That kind of stability, that is the definition of resilience. Okay, so we've seen the what: steady revenue, stable profits. Now we get to the really fun part, the how. How in the world did Kimley pull this off? Because these results were no accident. They were the outcome of a very deliberate strategy. So let's break it all down piece by piece. The very first piece of their strategy is all about real estate. For a business like Kimley, location is absolutely everything. So their first order of business was to lock down and improve their physical locations, creating the stable foundation that would give them an edge no matter what the economy was doing. And they were definitely on the move, expanding their footprint. You can see the total number of food outlets went up from 86 to 89, and that includes 4 brand new coffee shops. But the really critical part here is where they're expanding. They spent over $24 million buying up properties in mature housing estates like Yishan and Serangoon. I mean, that is such a smart, strategic play. These are areas where you have a guaranteed stream of people walking by every single day, which really takes a lot of the risk out of the investment. And this chart here, this reveals a huge piece of their property game plan. Over 70% of their outlets are now under what they call foundation leases. Basically, this just means the properties are either owned by Kimley outright or they're leased directly from the HDB on long-term deals. At the end of the day, this gives them incredible stability. They're not as vulnerable to crazy rent hikes from private landlords, which gives them certainty in their costs. That is a massive, massive competitive advantage. It's not just about buying new places either. They're also plowing money back into their existing ones. They've got this ongoing revitalisation program, and this right here just shows you the impact. They're upgrading their coffee shops to be cleaner, to have a better layout, and just to create a nicer place to eat. And this isn't just for looks. A clean, modern spot brings in more customers. And it also makes the stalls way more attractive to potential tenants, which is how they manage to keep an amazing 97.5% occupancy rate. Of course, having solid properties is one thing, but it means nothing if the food isn't compelling, right? So the second pillar of Kimley's strategy was all about innovating the menu, making sure they keep things fresh, exciting, and relevant for today's diners. Here's a perfect example from their Kimley dim sum brand. They rolled out new items like this Nanyang Otek Siumai and a curry chichong fun. Now, these aren't just random new things they threw at the wall. They are heritage-inspired flavors designed specifically to appeal to local tastes. It's that classic playbook. Take something familiar that people love and just give it a little twist to keep them coming back for more. And they had some real home runs. Their halal brand, Tender Fresh, launched this new nasi kari range. They basically realized that customers were looking for bolder, spicier flavors. And the result? They sold over 20,000 portions. I mean, that is a huge number. It's just a crystal clear sign that they listened to the market, they delivered what people wanted, and it paid off big time in sales. And innovation isn't always about adding something brand new. Sometimes it's about diversifying. Their Japanese brand Tonkichi is famous for its pork tonkatsu, right? Well, they strategically added yellow croaker fish to the menu. Why would they do that? Well, to broaden their appeal. They're now catering to a wider audience, not just pork lovers. It's a smart move that makes the brand more resilient. Kimley is also really smart about the fact that they don't have to do everything by themselves. They've made some great partnerships. They worked with Chef Eric Lowe to bring authentic dishes to their Hockerman brand. They've plugged into digital platforms like Shopback and Chris Plus to reach younger, tech-savvy customers. And of course, they run promotions with huge names like Coca-Cola to drive traffic and offer more value. Oh, and this is one of their most clever operational moves. In some of their outlets, they're using a shared kitchen concept. So this one kitchen houses 3 of their in-house brands all operating out of the same space. Think about how efficient that is. It streamlines manpower, you get the most out of your expensive kitchen space, and customers get more variety all in one spot. It's just really smart. Okay, so we've seen the strategy. Lock down the real estate and innovate the menu. Now for the million-dollar question. How does all of that actually show up in the financials? How does it protect their profits? Let's connect the dots. A huge chunk of their success really comes from just being ruthlessly efficient. We just talked about the shared kitchen model. On top of that, they're bringing in new tech, like these rotary ovens. These ovens cook food perfectly with less supervision, which means they need less manpower, and that's a massive cost saver in this industry. Plus, their central kitchens ensure the food is consistent and high quality everywhere. And right here, this is the payoff. This is the direct result of that whole efficiency drive. Their gross profit margin went up from 28.4% to 29.2%. Now, this is a really key number. It means for every single dollar of food they sold, they got to keep a bigger piece of it as profit. That improvement comes directly from running smarter, not just harder. And all that profitability leads to a company that is just in fantastic financial shape. I mean, look at this. They generated almost $39 million in cash just from their operations. You know what they say, cash is king, and this strong flow lets them invest and grow without stress. On the right, you see they're sitting on over $68 million in cash. That financial strength gives them the firepower to jump on new opportunities and handle whatever comes next. So, that's the story of their very successful year. But in business, you're always looking ahead, right? So what's the game plan for the coming year? Let's take a quick peek at their strategy for FY2026. Their path forward is built on 4 really clear pillars. First, keep expanding their footprint. Second, keep diversifying the menu. Third, a big focus on growing their halal business. And fourth, double down on making their operations even stronger with more technology. It's pretty clear they're not trying to reinvent the wheel here. They're just going to keep doing more of what's already proven to work so well for them. You know, as we look at their future, it's worth just taking a second to appreciate this image. Because when you strip away all the financial reports and the corporate strategy, this is what Kimley is really all about. It's that familiar, bustling coffee shop scene. It's a little nod to heritage in a very modern and sometimes pretty complicated world. So to wrap it all up, Kimley's story this year is really one of quiet, effective execution. They're making a big bet that the winning formula is this smart mix of tradition, the classic coffee shop, and innovation in their menu, their operations, and their real estate. So the final question for all of us to think about is this. In the super fast-changing future of food, will that powerful combination be enough to keep the flavors of life alive and well for years to come?